You are here because you want to find out how the president race and the presidential elections will impact the stock market. I've been trading for 12 years, profitably for 8. The first 4 years sucked pretty hard. But what I want to do is go through some technical analysis and give you some levels about what to expect, why to expect, and how you can prepare for a potential stock market crash. Let's talk about it right now. All right. We're here on the chart, and we're going to be analyzing the good old nice and simple SPX. It's the S&P 500, which everyone is very familiar with. And we're going to really zoom out here to a monthly chart so we can just kind of see what we're looking at. Now, these blue and red lines, these are not Democrat and Republican. The blue line is the 100-month line, and the red line is the 200-month line. So pretty much taking the prices of the last 100 and 200 months, adding them all together and dividing by 100, 200, that's what you get. Here is my expectation on the broader markets. Regardless of who gets elected, the markets are likely going to drop a little bit more. Why? Coronavirus, pandemic, global shutdown. It's not pretty. You've heard the term that the Wall Street right now is very disassociated from Main Street. And Main Street, there's a lot of people that are impacted negatively by everything that's happening. And I'm sure we all know far too well the strain and the negative impacts that's just happening on the day-to-day lives of everyone in the entire world. So yeah, it sucks. Now, not mentioning that US, the elections, all of the pressure there, plus stimulus. Is it gonna happen? When is it gonna happen? How much? What? Who? Plus, you have the dollar, right? We're spending billions of dollars every single month. Inflation is really starting to kick in. How are we gonna be managing this giant mess? Well, here's my thoughts. What we're gonna do is we're gonna go back to 1987. Granted, I realize that we're in a totally different market and everything is totally different this time. But what I wanna look at is the similarities in the stock chart, because the stock charts don't lie. If you can interpret price correctly, and we will, we can find out what a chart, what a company, and what the markets are likely going to do ahead of time. In fact, this is myself and all of my team going to cash on September 2nd. I am in cash. 99.6% cash right now because the markets are extremely, extremely high. We are just absolutely going gangbusters. We are up 62% since March, by the way. It's a little bit of a lot. And for the year, we're actually not that much. If you just bought and hold, right at the open or whatever, 11%. So we're getting to a spot where I think we're going to get some selling at some point. September 2nd, by the way, was the all-time high of the market. There's an example, there's an example, and there's an example. We sold very, very high on tons and tons of companies, absolutely expecting that this was a time to sell, and now is going to be a good time to buy when we get these pullbacks. What we're going to do is go back to 1987 and just analyze the drop that took place on the S&P. Now, the reason this is important is because you'll notice that the market on the S&P 500 at the time was making pretty nice higher highs. You'll also see that we had this decent long-term distribution phase where we trade sideways, trade sideways, trade sideways, and then we broke out, made new highs, and then had a really big drop. That drop did not totally come in contact with the long-term moving averages, but we did have a very, very fast drop. We stabilized and we eventually went higher, taking out that previous all-time high in just sort of a few months. Well, about 2 years really, but we took out that previous resistance. We retested that old resistance with another drop in about another year from there, and then we just absolutely went bananas. Now, how can I compare that to now? Again, looking at just pure chart perspectives, that's what I do best. I'm not a political specialist. I'm really not a macroeconomic specialist, but I am a chart specialist. I can look at a company, I can look at the history of the company, I can read the sentiment of the candles, and I can tell you what the investors are feeling, why they're feeling that way, and how they're feeling about the future, looking at this particular chart. So going into where we are now, we're gonna see something similar. A little bit bigger perhaps, but still similar. You're gonna notice, again, back to that distribution phase. So remember where we were in 1987 and we were trading sideways leading up to it? Well, here we go. There's the sideways action. There's the really, really nice run up. And then there's your ginormous market crash coming down to the 100 simple on a monthly chart. A very nice buying opportunity, as crazy as that sounds, really, really good level to get in. Well, Now we had a massive crash that came into that, and look what we've done. We have taken out that new all-time high. We have closed above on a monthly chart that resistance. That is a big, 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 big deal. Unfortunately, a lot of the newer traders, the noobs as they're called, that was the spot that they bought. And again, that's the spot that myself and my team, we all went to cash, and 100% of our trading accounts, IRAs, everything, all in cash, all of it sold the exact high of the market on September 2nd. Not bragging, just being factual. What I now expect on the broader markets is, yes, we will likely pull back and retest some of these levels on the S&P 500. This is going to be about 29.40, and I think this is probably worst case scenario. If we're coming to a weekly chart, that would kind of coincide with the 100 and 200 simple on a weekly, and you'll also notice the potential propensity of a little bit of a double top here. So if we do start breaking down these levels, it would make a lot of sense to come back to start testing that 2,900 level on the broader markets before the markets go higher. Not a political statement. Personally, I think Trump will get reelected by a landslide. Now, that's because historical evidence says and proves that if the market is higher leading into an incumbent president election, 89% of the time that president gets reelected. 89%. That's heavy and large and statistically strong. Therefore, the market is a little bit higher than where we started at the beginning of the year. This is January, and you can see we are points higher going into the election. Barely. I'm talking just a few percent points. Now, just a few weeks ago, we were nice and up there, about 7 or 8% higher than we were right now. Therefore, Trump gets reelected, most likely, and the market still does drop because that's expected. A lot of people think that Trump will get reelected. A lot of people think the same thing will happen that happened in 2016 when the president did get elected. When Trump got elected in 2016, you'll notice and remember that the market just absolutely skyrocketed like a banshee, just tearing up the charts, really running like the bulls. And it was a beautiful, beautiful year to be an investor and trader. However, a lot of people think that's going to happen. Therefore, the market likes to humble people. A lot of people think Trump will get reelected. They're throwing the money into the markets, and the market's going to sink a little bit, scaring some people. Now, if Biden gets elected, which is absolutely a possibility, again, this is not an opinion. This is simply not a political statement at all. I'm just letting you know my thoughts and perspectives. Biden winning would be a shock to the market, and a lot of people would be a little bit taken back. I think that's kind of worst case scenario, which is what we see here in front of us, this little pink line. I think that's what would happen if Biden gets elected. We would have the blue crush, the blue surge, and the market would drop pretty nicely. And then everyone would realize, hey, wait a minute, it's another president. They're probably gonna be like all the other ones. So everything will be fine, buy the dip. Stimulus will come in. It'll just come in a lot slower than if it was a Trump candidate. Now, again, if Trump does release the stimulus, great. If Biden releases stimulus, great. Doesn't matter to me who does that. What I can say is I think it will be faster if Trump was still president and the stimulus gets passed because, well, he's already in office, and I think that things would just move quicker since there's not a lot of transitional processes going on. I think that kind of makes sense. So if Biden does get elected, it's going to take a little bit longer for the stimulus to get passed. If the stimulus does get passed, there's going to be a lot more taxes and implications are going to be taking place. And I do think the market's going to have a little bit more of a dip if that comes into effect. But overall, it will be a very good buying opportunity because, well, let's face it, COVID will go away. And the COVID dip has already been felt by investors and traders and people all around the world. We're used to it. We know it. We expect it. Yes, we could have a drop. And if it occurs, boo-hoo, not the greatest thing in the world. Got it. But in general, yeah, we've already felt the pain. We realize it. People have had COVID. Your friends might have had COVID. Your grandparents might have had COVID. Most of them, in general, have been okay. Now, not everyone. Obviously, it's terrible anytime life ends for anyone. And people obviously have died, and that's terrible. However, people die a lot all the time from a lot of things, especially if you're old. It sucks about getting old, I know. Therefore, what we have to be keeping in mind is, in my opinion, we're gonna go back to the monthly chart and realize one very important factor. We took out these highs, and I'm gonna go to the SPY so you can see the volume. This volume is magnificent. This was the March volume of COVID. some of the highest volume bear spikes that we've ever had. And the highest volume spikes that we've had relative was August 2011, which we also took out and closed above. And then October 2008, which we also closed and took out above. Both of those instances, we broke out higher, and then we made another dip before going higher again. So here it is. There's the breakout right there, and there's the dip. Same thing with August 2011. There's the breakout, new high, and there's the dip. Both of those situations, we broke out, made new highs relative to that volume. Bears were trapped, bulls got excited. The noobs bought really, really high. We rotated, and then we went higher. It's clean, obvious, and simple to me that almost the exact same thing is going to take place here. Yes, we could easily pull back to the SPY, 307, 300, or even 290 if Biden gets elected. I still think that's kind of my worst case scenario on the charts, not a political statement, but still a buy low, sell high market. Yes, valuations are going to be changing. Yes, things are weird, but COVID is here to stay for a while. I do not think that's going to go away. This will be a market impacting situation where we're going to remember for our entire lives. But in 5-6 years from now, it will be just like Zika, avian flu, swine flu, Ebola, and all the other ones that impacted the world, even though it did not impact the world nearly as great as COVID did. It'll be the exact same thing overall in the long run, in my opinion. We will find out, but that is something that I think you can take advantage of as far as the analysis is concerned. Some of the stocks that I think will still perform very well regardless if COVID is here or not, and regardless of who is impacted in the elections or not, will be in the next video. Click on that, or click on that, or click somewhere down below. I don't know, whatever my post-production team is gonna be doing. I will show you some stocks I'll be watching, and where I'll be watching, and where I'll be buying, and why in that video. I hope this was helpful, entertaining, and impactful, and most importantly, enriching. That is my mission here at Real Life Trading, to enrich lives. Thanks for watching this video. You rock.